But let's bring in Scott Bauer. Let's bring in the CEO of Prosper Trading Academy. Scott, good morning to you. Welcome. Thanks for sharing part of yours with us. I guess after last week's consumer sentiment number, which was a little bit of a disappointment, one could argue that this retail sales number could be expected to come in a little bit soft, but I don't know if it's anything necessarily to get too concerned about, and there does seem to be a lot of optimism still related to these vaccine releases and announcements the last couple of weeks.
You know, the headlines this morning, Ben, if someone was just to look at the headlines, you look at what Home Depot and Walmart did. You know, the results came out just a short while ago. And then you see what these retail sales numbers are. It's a little bit head scratching, quite frankly, because, you know, you just isolate Walmart and Home Depot and you look at those headlines and say, man, they blew these numbers, you know, off the doors, right? Especially the online numbers. Unbelievable. Then you look at the overall retail sales and you see weaker numbers, much like you said, you know, kind of following the path of the consumer confidence numbers that we saw. Is it a lot to write home about? Is it something to really be concerned about? You know, I think it's something that we do have to be a little bit concerned about, because if this kind of leads the next 4 weeks, the next 6 weeks through the holiday season into the end of the year here, this doesn't set up well. It really doesn't until that optimism over the vaccine really, you know, takes hold and changes the entire, you know, landscape of things, if you will.
Yeah, not only optimism related to vaccines, Scott, as you mentioned, but distribution. There's some concerns related to, you know, whether that's really logistically possible. And then, but let's talk about, as you mentioned, these numbers could be and potentially are a bit of a sign of what's to come. Now, obviously, if this starts to increase, the disappointing data that is, or misses to the downside, increase into the holiday session, that would weigh on investors' minds potentially into the new year. But in between now and then, Scott, I mean, you've got, well, lockdowns, which are starting to come back into place. We talked about that at the top of the show. I mean, ultimately, it does seem like the curve is kind of rolling over to the downside here amidst some of the fundamentals. I mean, and you can understand why. It just seems like the consumer's taking a little bit of step back as they see some of the headline news and express some of their concerns, I guess.
No doubt about it. And I think that's what you're seeing reflected, at least pre-market this morning, in the stocks of Walmart and Home Depot. You know, reports that were actually really good, and the stocks are down, getting hit a little bit pre-market. So I think it is a concern, Ben. I think that the next 4 to 6 weeks are just so critical for the consumer, and not just for the consumer, but for retailers, because we know this is their biggest time of the year. And if people are a little bit hesitant to spend money, that's going to be an issue.
All right, let's talk a little bit about import-export prices here. Scott, we've got export prices month over month coming in up 0.2%, slightly below the increase they were looking for, 0.3%. They did have the year over year, which is still down 1.6%. Import prices year over year down 1%. They did come in lower on a month over month basis, down 0.1%. What is this telling us?
Again, I think these are more outliers, but I think what it does tell us is there's weakness globally. Yeah, and it's not just here at home. There is weakness globally. Does that make us feel any better that, you know, especially the import prices, that those are much worse than expected? No, it shouldn't make us feel any better. It's a concern, but this one I think is definitely more, let's say, realistic in terms of what is going on globally, and can be maybe put off to the side a little bit, as opposed to what's going on with consumer here, which I think could be much more of a concern.
I'd agree, especially with the vaccine news, corporate news. Again, individual companies like Tesla, Home Depot, as you mentioned, Walmart are definitely going to attract probably a little bit more attention than some of these trade numbers. But Scott, let's talk a little bit about another strong area in the economy along the lines of, if we start to see what we were just talking about in terms of retail sales and some of the sentiment there shift and for the worse. I mean, ultimately, the housing market has been a major focal point. We've got some data today coming out. Just heard from Canada, CAD housing starts just came in at, well, a little bit below expectations. I guess this is what raised my eyebrows here and brought this thought to mind in terms of asking you, would that be kind of another straw on the camel's back, so to say, if housing were to shift right now, and not necessarily trying to get ahead of what to expect here necessarily or project anything, but this has been a strong point and certainly a pillar of strength for investors to lean on throughout some of the uncertainties amidst the pandemic.
No doubt. I mean, it could send up some red flags if we start to see some weaker numbers. But everything that I see in my limited world here and
Isn't suggesting that?
is not
Okay.
suggesting that exactly. I think the last reports that we got were a little bit lower than expected, but this market has been just red hot, and I don't see how it doesn't continue. Yes, rates are up a little bit,
Yeah.
right? I mean,
Yeah.
the 10 years are up a little bit, but still historically at near all-time lows. So I don't see that the housing market really cooling off at all. But if it did significantly at all, that could really, like you say, maybe be the straw that breaks the camel's back.
Yeah, during the financial crisis, I remember looking down my block, and for blocks down, you would see multiple houses for sale signs. It hasn't been the case recently amidst this situation here, a little bit of a different situation, as you mentioned. Let's talk a little bit about rates, Scott. You mentioned they're inching higher, amidst some of the better than expected data, stimulus expectations, and while inflation hasn't necessarily been a major concern, and the Fed still seems to be keeping their foot off, on the gas pedal, one could argue, and off the brakes, trying to stimulate the economy. I mean, rates have been inching higher. I mean, a reflection of, and we've seen the yield curve steepen as well, and ultimately that helps the banks out.
And you know what? Listen, rates ticking higher is not a bad thing. I know.
Right,
I'll probably get a lot of people, texting me and saying, "How could you say that?" But it's not a bad thing. It's a sign of recovery. It is a sign of some healthiness in the economy. Listen, we're still near record all-time lows here. So seeing the 10-year, up around that 0.9%, even towards 1%, yeah, it's not where it was weeks or even months ago, and it certainly affects mortgages, refinancing a little bit, but that's a sign to me of some healthiness here. So I don't think that's a sign of concern whatsoever.
Yeah, and it's still within that range that we established back in March, the high up around 2%, the low below 1%. Treasuries, a reflection of rates, so I'm going to avoid getting too much into that. But Scott, I wanted to get your thoughts on the dollar right now. It's continuing to hold near these lower levels. It's been in a range for a while now, though, 95 to 91.70, 92 we'll call it. We don't necessarily want to split hairs, but what are you watching for there? It's been reluctant to provide any real directional conviction one way or the other. Should we expect more of the same, or again, as some of the economic data, as the indices and some of this news related to the coronavirus, could these be potential catalysts, or just, again, is it status quo and wash, rinse, repeat as far as some of the range-bound price activity we've seen in the greenback?
So we talk about in the commodity space and the dollar being one, crude being one, these ranges, in that it's, these defined ranges, and you trade these ranges, and at some point they're going to break out, whether it's on the downside or the upside. In terms of the dollar, it is so weak right now. The only thing I can really see affecting the dollar at this point is if, there is some major announcement about a stimulus package here. Otherwise, I don't see how it trades out of this range. I think there's more headwinds than there are tailwinds right here. So if anything, I would be probably leaning on the short side, meaning on any sort of rally at all, probably look to short it a little bit. But I just don't see how we trade out of this range without any significant news coming out of a stimulus package. I really don't. Yeah,
it has been a bit of a waiting game. You can see that reflected here on this chart, price activity. The dollars, the candles, the purple line here is crude. And as Scott mentioned, ladies and gentlemen, they have both been very much range bound. All right, Scott, we head into the middle of the week. Housing data seems to be a major focal point. A lot of focus on corporate and retail. What do you have your eye on, and what should we be watching in terms of potential catalysts here for financial markets? A lot of Fed speakers, I guess one could argue as well, potential movers there.
A lot of Fed speakers, probably more of the same that we've seen over the last weeks and months, that, really the path that COVID takes and perhaps the vaccine is going to direct what they do. I think the important thing, Ben, is over the next week, 2 weeks, to get any signs of initial holiday sales. You look at the retailers now, and every retailer that I see out there has already rolled out Black Friday sales. They're doing whatever they can, not only to get people in the door, which is very difficult right now, but obviously push the online presence. So the consumer, in my opinion, over the next week or two, could be the driver for the overall market.
Scott, appreciate you joining us here. We'll keep an eye on these markets, financial markets, and some of the fundamentals that are tied to this discussion. Scott Bauer, ladies and gentlemen, the CEO of Prosper Trading Academy, is joining us to help us take a look at the retail sales data, import exports, and market reaction to